Ladies and gentlemen, welcome to the special interview. Today we have a first-time guest to the show, VP of No Nonsense Forex. VP runs NoNonsenseForex.com and also the YouTube channel of the same name, where he educates people on trading strategies with Forex. Though it applies to the markets in general, it's heavily dealing with the technical side of things, especially when it comes to trading currency pairs. VP, I'd like to thank you for joining us today on Silver Doctors.
It's great to be here. You guys are in my heavy podcast rotation, so it's quite an honor on my end.
Now, VP, thank you. I appreciate that. Now, you are a professional Forex prop trader, which means you're actually trading for a firm. So we're not just talking about someone who is, a chart hugger looking at the charts who doesn't actually trade or just has a paper account. You actually have money on the line and skin in the game. And I'd like to kind of glean some things, especially related to the dollar and gold and currencies and the markets in general. But if you could, I'd like to start somewhere very interesting. And it just has to do with Twitter and the Twitter effect on the markets, VP, because, I want to see how you look at this coming at it from a Forex trader point of view, because, just last week, President Trump said, if we don't get the House to vote on the USMCA, which is NAFTA 2.0, pretty soon the economy is going to collapse, right? The markets didn't move. But, I'm looking at that tweet and it's a Saturday afternoon at 1 p.m. So there's kind of a reason why the markets didn't move, whereas opposed to today, at 9:35 a.m., President Trump tweeted out, getting very close to a big deal with China. They want it, and so do we. Now, when he sent out that tweet, the markets immediately moved. All of the major indexes in the U.S. hit all-time record highs today, including the Dow, the NASDAQ, the S&P 500, the Russell 2000. Gold and silver immediately went down. So, I don't think that it's disputable anymore whether Twitter has an effect on market movements at all and whether Trump's tweets have an effect on market movements at all. Looking at any chart at 9:35 a.m. Eastern Standard Time this morning shows that clearly, in my opinion. So I guess my question to you is, as a Forex trader, what is going through your mind when you're seeing like tweets fired off like that and then the market's moving? How difficult is it to be a trader with kind of what I would call the Twitter effect, or any way you'd like to take that question there, VP?
It drives Forex traders absolutely nuts, and it has for a while. And for the longest time, I couldn't really piece together, why the market would even care after a while, because 2 days later, anything he said would just be much ado about nothing, and then he'd be on to something completely different. So why would the market think that this is going to be what fuels the ultimate move? How could this keep happening? And then over time, through mainly most of the podcast I listened to, I learned that there are high frequency trading algorithms that connect themselves to Twitter. And as soon as something comes out and these particular words or phrases trigger the algorithm, everything starts moving. So when you're a technical trader like I am, you want to mainly avoid everything fundamental you possibly can, because you don't have any control over that. You do have control over your charts. So when these little rogue tweets and moves come up out of nowhere, it's a helpless feeling, because you could have been going the right way technically, and this could have been the way the market was going to go had it not been for this new thing we have to deal with now, which is the tweets and how the markets react to them.
Mm-hmm. And I find that very interesting because, I've kind of like developed this kind of like little theory where I think like Twitter has almost become, in my opinion, if I could call it, like the poor man's Bloomberg terminal. Right. So whereas, just the average, retail trader, not a professional, but a retail trader or a mom and pop trader or something like this, they can't afford Bloomberg terminal. Right. So they're looking for any kind of edge that they can have in the markets. So that brings up another interesting kind of follow-up question here, which is, Michael Bloomberg has kind of entered the race here, although it's a very large field of Democrats. And, one of the things that I wanted to consider is it possible, because if President Trump has an effect on the markets through Twitter, and if Bloomberg Terminal, right, has an effect on the markets because they're feeding out the news headlines that HFT algos can feed off of, is it possible that, now this is a long shot, obviously, because, we don't know who the Democratic frontrunner nominee is going to be eventually. But is it possible that the 2020 election, let's just play what if for a second here, and if the 2020 election came down to President Trump versus Michael Bloomberg. Could that election turn out to be a battle of the HFT algos, which would essentially be a battle between Twitter on one side and Bloomberg Terminal on the other? Or am I thinking about this wrong, VP?
I think if Bloomberg is going to win, that's what he's going to have to do. I mean, wouldn't you? I mean, he's not going to out-debate Trump. He's not exactly a man of great persuasion or great speaking or even a whole lot of really great ideas that are contrary to what Trump's putting out there. And really, I don't see a candidate in the race that has anything like that. You don't have that Barack Obama type that, you know, the Democrats and the independents can really get behind. So you have to do something. And I think that something would be take the one thing Donald Trump has wrapped his entire identity around, and that's the strong economy, and find a way to take that down. Now, if you control the vehicle to where most of these high frequency traders algorithms are connected to, I don't know the ins and outs mechanically of how you would do that, but it does seem like you would have some level of control over the outcome if you wanted to. And it would be more a matter of not getting people to vote for you so much as it would be kind of what they did with Hillary last time, and find a way to get people to lose interest in voting for Trump. Mm-hmm. You know, nowadays, you're not going to get somebody to completely switch sides. Mm-hmm. So it's really a game of how can we make people not want to vote for Donald Trump this time around. Just from a pure strategy standpoint, that's how I would do it. I just don't know if he has the means to, but if anybody does, it would be him.
Mm-hmm. Yeah. And, you know, it seems like that's going to be a very interesting development because, you know, basically, you know, if we could talk about President Trump's presidency so far, he's basically the first president who is very active on Twitter. So, you know, we could be shaping up to see the first election here where not only is Twitter continuing to be a crucial part, but like just the markets in general and the whole concept of HFT algorithmic trading, because the average Joe on the street doesn't even know that HFT algorithmic trading exists, right? So this could possibly shape up to be something where all of a sudden people are saying, well, HFT algorithmic trading, what is that? And then robo trading becomes a thing in the mainstream again, kind of like so many other things that President Trump has brought to the table. But that said, you're a technical trader, VP. Now, one of the things that, you know, I have trouble understanding that hopefully you could help us figure out a little bit is, you know, I look at like the dollar, for example, and I think that the dollar is more and more weaponized, right, with the use of sanctions, right? And then other things that I look at are, you know, we've had so many revelations about like spoofing in the markets and individual traders or, you know, desks at different banks being charged with, you know, manipulation of various markets, including the Forex market, including gold and silver market, commodities markets, other markets. I guess my question to you is just broadly speaking, you know, how do the technicals play into this? How can we make sense out of the technicals when there are all of these different factors that go on that could affect the value of the currencies one way or another, whether it's blatant market manipulation or whether it's sanctions? How can a person tie in the technicals to their trading?
So one of the first videos I ever did was explaining to everybody that, hey, look, there are big banks out there that manipulate the price of currencies any way they want, any time they want. But they do this based on major moves done by the retail traders. If the retail traders go one way, they're going to go the other way. And as soon as those retail traders have had enough and they decide to turn course, well, that's when you can see price on the bank side turn course as well. The majority of retail traders are always just going to keep losing and keep losing. Now, some of those retail traders in the majority are going to end up in the minority sometimes, so they're going to get wins, and that's going to keep them in the game. But that's mainly how that machine works, and you cannot completely avoid this. But what you can do is you can stop using all the major tools that technical traders use, so you don't end up trading at the same time they do. Your best shot to really make it long-term is this business is to stay under the radar and to use tools that nobody else is using, which is the good news is there's a lot of them out there and people have never even heard of 98% of them. So what my channel does is show you where these things are, you know, show you how to test them so you can find the best ones, then put them together, and then you will have something that is completely unique to what everybody else has. And you're still going to run into those hot zones where the banks are trading, you know, and it's a coin flip whether you're going to, you know, get a nice little boost or it's going to cut the other way. But at least you have a better shot than everybody else does. And this game is really about upping your odds as much as possible. So maybe not short term, but long term, you're going to come out ahead.
Hmm. And VP, just to add on to that, I'd like to ask, when we're talking about trading, just so the listeners and the viewers can get a little better understanding of what we're talking about, this would apply to intraday trading as well as it would apply to swing trading, as well as it would apply to a little bit more longer term holding, or what kind of time frames do you look at when you're trading, or would you be looking at trading all of those different time frames?
I trade strictly off of the daily chart. So all I have to do is check in once a day, see what's going on, and see if I have to make any moves. The answer is often no, and I just walk away. But if I make moves, I make moves, and it takes me 10 minutes, and then I'm done. The good thing about this is there's a whole different game the banks play to the intraday traders, and I couldn't even wrap my head around that. And there's so much nonsense that goes on. There's so many different news events you now have to pay attention to. Where if you do it my way, you can just almost write them off completely. So I just think, I live on Pacific Coast time too, and the forex market keys off of London. It does not key off of New York. So for me to really be trading during the most active times, I would have to trade from midnight to 6 in the morning, go to bed at 6 a.m. with a bunch of anxiety because I still have open trades. And that was just not the way I wanted to live. So it was kind of an easy transition for me. But looking back on it, I've gotten so many people to stop intraday trading and take the easier and ultimately more profitable course of just trading off of the daily chart. So we still have to worry about some news and all these little rogue tweets and things like that, but at least we don't have to worry about the other 85% of news events that does knock people out of their trade. It's pretty nice.
Hmm. I find that very interesting because I've been like just an amateur retail trader for that matter. Although I haven't placed a single trade this year though. My trading account was up like 2.6 or 9% or something like that last year, not very much at all. But it's funny because I like to watch the tick by tick all day long. Just being the managing editor at Silver Doctors. But it's interesting that you're just looking at the daily chart and you're not concerned with the tick by tick there. Um, now, VP, I'd like to talk a little bit about a few different currencies here, and I'd like to talk about the dollar and about cycles in an upcoming recession and things like that. Because you know, basically, I've heard you say before, and I'd like to start with this first. That trading forex is something that's recession proof, right? Like stocks can go down in a recession. Housing prices can go down in a recession, right? But you've been saying that forex is something that is recession proof. Can you explain that a little bit? And then also, I think I've also heard you say that the United States dollar drives the foreign exchange bus. Could you please explain that as well for our viewers and listeners?
Okay, so I'll go backwards. I'll start with the last thing you said, because it branches off what we talked about before with the big banks. The big banks manipulate currencies where it is popular, because that's where the most retail money is sitting. If you take two currencies people really don't trade too often, and you look at that currency pair, there's no reason for the banks to be there because there's just no money coming in and out. But there is a lot of money coming in and out of USD pairs all the time. So that's where they manipulate the most. And so what I always say is, hey, look, there's 8 major currency pairs out there. In Forex, we don't just trade one currency. We trade one against another one. So if while you're starting out, or if you just have a little bit of money, if you just want to avoid dollar pairs for right now, it's probably in your best interest because then you'll be trading pairs where the least amount of bank manipulation occurs. So start there, get good at it, and then, ease your way into dollar pairs because I make money on dollar pairs, but I make less money there than I do when I'm not trading the dollar. So I still trade everything because it's in my best interest to. But if in a perfect world, I would just trade non-dollar pairs all day because I have a lot more control over the outcome there than I would otherwise.
Mhm.
Now, the reason why it's recession proof is exactly what I just said. You're trading one currency against another. One's going to be stronger than the other, and you get to trade it up or down. You can go short just as easily as you can go long. And no matter what the market's doing, that whole engine's just going to keep on turning. It's almost nice to have a recession because people freak out and they start putting their money they have in equities into cash, and that gives volume to our market. And then we really start making good money, once that starts to happen. 2019 has been rough for a few reasons. The whole Trump tweet thing, and then also how when you have that almost like the top of a roller coaster when it's clicking up before it falls is probably the worst time volume wise for a forex trader, and we're seeing record low volumes in 2019. We're trend traders. We want the market to move. And so it'll start moving once things get really bad with the S&P. But until then, it's choppy waters for us for right now.
And what do you think about a Fed put, right? Because everybody thinks that the Fed's got the markets back and that they can just keep this thing going forever. Can they keep it going forever, VP?
If they want to, yeah. Who's to say they couldn't? I mean, we always say there's consequences for these actions. Well, there hasn't been, and until there is, and you were saying too how there's regulatory bodies that crack down on these big banks for trading. Well, they do, but it comes out to the equivalent of a parking ticket, and not even that. It's just the regulators making it so they look like they're doing their jobs, so people just don't completely blow up over the whole thing. But if you really look at how much is in control compared to what they're actually fined, it's absolutely nothing. It's a handshake deal for the most part. So yeah, that whole machine's going to keep going as long as it possibly can, and nobody wants to get caught with the hot potato. So it's just going to keep going because nobody wants this really bad everything bubble to pop on their watch. So it's going to almost take somebody coming in that doesn't know what they're doing to really set this whole thing in motion. But it seems like everybody has this whole rigged game figured out, and it can just keep going. There's no reason not to. I said before, short-term bullish still on the USD, but I'm just long-term bearish. And I don't know when that fall is going to happen. So I'm using my strong dollar now to accumulate other assets, while I can, because none of us really know when this whole thing's going to turn.
Yes, and speaking of the turn, and I find it interesting you're looking at a daily chart because, I'd like to talk about a couple specific currencies here. I don't know how much you follow the Mexican peso, but I'd like to talk about this one just because I have a little bit of knowledge with it. I lived in Mexico for a couple years, went to school there for a couple years, traveled to Mexico frequently, lived on the border in El Paso, been over it in New Mexico hundreds of times. So, I see the interactions and I see, just the real life street level issues with currency. In May 2014, the Mexican peso was under 13 to the dollar, right? So it took 13 pesos to get $1. By the end of the year, 6 months later, it was at 15. So I guess my question to you there would be, that's a major move in just 6 months, is it not? And then, is it possible that the dollar can have a major decline just in general or against other currencies with that speed? And then to take it one step further, VP, from the beginning of 2015 until January of 2017, the Mexican peso then went from 15 to 1 to the dollar to over 22, right? So within 2 years, when it took 15 pesos to get $1, it took 22 pesos to get $1. So the point is, these are huge moves. The point is that the Mexican peso weakened big time, first over the course of 6 months, and then really big time over the course of 2 years. So just in your outlook in general for the dollar, I guess, what are you looking at in 2020? Is it possible that the dollar can weaken with that kind of, rapid move that we saw with the Mexican peso in 2014? Or am I thinking about this wrong here, VP?
I don't think it has a chance to move down that sharply. I think you will see moves like that in the Mexican peso and some of the South American currencies, for example, just because their whole, administrative situation is in turmoil. I say administrative, I mean, governmental situation is up in the air. I mean, elections in countries like that can mean something completely different than the election you had before. And then somebody else comes in and they think completely different. And it's just very strange back and forth. And it wreaks havoc on their currencies. To where even if you had that in the United States, we are still the cleanest dirty shirt. If we're not going to be strong, who else is at this point? So I think if there's going to be a decline, we're going to see it a lot slower. I think the way people are getting out of their dependencies on United States dollars is a slow occurrence. Maybe 5-10 years from now, you're going to see things go down a bit sharper. But if there is going to be a decline with the United States dollar, I don't see it happening to that degree. I think there are major political reasons why you see those currency fluctuations, because there's just a lot less stability over there. And that's why you're seeing that. Yeah, I guess, if I'm being greedy, I would like to see the dollar tumble a little bit. So a lot of my non-dollar assets go up, but I'm being patient with everything like that.
And then, to stay on the dollar here and then to also tie it into the Chinese yuan, because I'm also thinking, and this also has to do with like the trade wars and with President Trump, but the whole concept of a weak dollar versus a strong dollar and then competitive devaluations. Just what is your outlook for the yuan? How do you see the trade war tying into this? And is that a factor in your trading at all? I guess what I'm saying to say is you're conscious of the fundamentals, but you're strictly technical when it comes to your trading. Or am I thinking about that wrong, VP?
No, you're pretty on top of it. I'm purely technical from a trading standpoint. From a buy and hold standpoint, I'm a lot more fundamental because you pretty much have to be. That's why I typically don't trade really, really long-term charts, because so many things can happen between now and then. And I think it's just better to have an overall macro perspective on things. So I don't trade the Chinese yuan, but I do hold Chinese yuan, not necessarily because I'm really bullish on it. I think China's a bit of a mess too, but almost just as a pure hedge. So I hold a pretty sizable basket of different currencies as well, apart from precious metals. Just as an extra level of hedging in case the dollar falls, and the Chinese yuan is one of those currencies, but not even really because I like it, just because I think it's just a great anti-play towards the dollar itself.
Mm-hmm. Very interesting. And you mentioned hedge, and you just mentioned gold and silver. Would you consider those like currencies as a forex thing, or would you consider that as like basically a safe haven insurance policy? How do you look at gold and silver, VP?
You can play it a couple different ways. So I hold actual precious metals almost just from a pure defense play. Like, let's say there is a gigantic currency war and everything's just burning to the ground. Well, gold and silver is that one place where you can sit there, be completely neutral, watch everything burn to the ground, and then come back in and get your nice cheap currency when it's time to. I love the defensive nature of gold and silver. And then you can play it more offensively if you want. I just did a video on this too, how you can go towards mining stocks and different gold ETFs and silver ETFs. And you can also play inverse gold and silver, platinum, palladium ETFs if you want to trade it on the way up and the way down.
Mm-hmm.
There's a lot of different ways you can go at it. You don't just have to hold metals and look at them and cross your fingers and get all upset over the fundamentals that turn out to mean nothing in the end. You can actually make money in the meantime too. So I like it for defense, and I also like it for offense too.
Mm-hmm. Very interesting. And, just in general, when it comes to currency, because one of the reasons why I like gold and silver is because, with the Fed talking about, they're determined to get 2% inflation, and now they're determined to let it run a little bit hot here before they raise interest rates. And then I look over in Europe, or, you see negative interest rates. So I guess my question is, does inflation and does negative interest rates or low interest rates, does this factor into your trading one way or another? Or what does this mean for the buy and hold strategy there?
I mean, I think we're overdue for all of those things to start occurring. And a lot of times they occur all at once. So you're really double, triple, quadruple insured with gold and silver because they have those intrinsic values to them that none of these other possibilities have. I mean, you never see these things coming until it's too late. So I can't even really speculate if inflation's coming. It should. I mean, it's the next logical move.
Mm-hmm.
But as we've all seen, the next logical move doesn't always happen. So
Mm-hmm.
I think we're really going to get caught off guard with all of this. So I don't even wait for a really good price. I just get in when I can and just kind of sit and wait and let things play out.
Mm-hmm. Yes. And speaking of playing out, I was just wondering, because you're a Forex trader and, you look at a lot of different things, and some of the things that you also look at are cycles in general. Because markets go through cycles, right? We go through recessions. This current expansion is over 10 years old. A lot of people are saying it's long in the tooth. I would agree with that assessment. So I was just wondering, just from a Forex trader and a technical and a prop trader point of view, how do you think the next recession is going to play out here? And then on top of that, how is that going to factor into investor or trader psychology? And any way you'd like to take that, those questions there, VP?
I think it's a great question because I think this recession is going to be completely unique to anything we have ever seen. I've always believed there are actual human actors at play when it comes to every single downturn. I think they pretty much decide when it happens, so they can position themselves to profit off of it, and then they get back in when it's low, and that's how they keep their generational wealth going. Just a theory, but a pretty good theory, I think, because if you look back at it, every time a recession has happened, almost everybody has been completely caught off guard. I mean, even as recent as the 2008 recession, I mean, almost nobody was short. They made a movie off of the 5 people that were actually short, and I think 3 of those guys had to be convinced, and it was such a crazy thing to be short the market back then,
Yeah.
so, but it's such a different time now with social media. I think everybody's more aware of it. And no matter how much you try to pump the market to get them back into it, it's not working. I saw an article in the USA Today, of all places, back in November, saying over half of wealthy Americans are well positioned for a recession. And that's the last thing these people want. So I think when they do put it in motion, it's not going to be that sharp decline where a bunch of people who are ready for it make a bunch of money overnight. I think it's going to go down in the long term, but on the ride down, it's going to violently move up and down, just knocking people out at every turn. So you really have to be positioned long term and just kind of hold on for the ride, because that's how I would see it playing out. I just think of it like, if I was on that side, if what I'm saying is true, and there are actual people who do this, how would I play it, to maximize my little evil profit, in the end? And that's how I would do it. I would take the market down, but I would try to shake everybody out of it along the way by shooting price up for no reason, 5-10% in a week, knock out those stops. And that would be the only way that I think I could extract as much money as I could compared to 2008, the dot-com burst and everything like that, because too many people are just ready for it this time. It's not going to be the same thing you saw before.
Mm-hmm. And that's interesting, because just taking it way back, I think about 1933, and when Roosevelt put out the executive order telling Americans to turn in their gold for $20.67 for each, double eagle $20 gold coin. And then, 1 year later, gold was revalued from $20.67 to $35. So, I would agree with you when you say that, there are certain people that do in fact benefit from this off of the inside information, because nobody can say that these people didn't know that they were going to revalue gold to $35 the very next year. So I find that very interesting. And then just moving it one step forward to continue this theme, how does Nixon closing the window Sunday evening currency shock to the world play into this at all? Do you see that like a reset or some sort of shock devaluation coming? And then how would that factor into your trading?
I don't really see anything like that. I guess I've really never considered it. I think the whole move down is going to be a lot more slow and gradual, instead of a lightning bolt on a chart going downward like it normally is, because it's just a different game. If you want to make a move like Nixon did and start devaluating currencies, there would still be quite a bit of people who make money off of that. And the goal is to just make a handful of very powerful people a lot of money off of that. We're too ready for stuff like this. We're too positioned. There's still way too few people, I think, in the gold and silver game, but there's still a lot more than there was before. I mean, you saw the chart, you saw the accumulation, not just from retail traders, but from central banks too. So I don't see any kind of cataclysmic thing happening. I think this is going to be a painfully slow downward move when it comes time to be.
Mm-hmm. And I do thank you for all your time today, VP. So just winding down here, I'd like to know, as we wind down the rest of 2019 and get into early 2020, what are some of the things, just whether it's in the markets or the economy or in politics or geopolitics, what are some of the things that are going to be on your radar most moving into the end of the year and then moving into 2020, VP?
I just want to be positioned right now. Because I think, like my little theory with the Bloomberg terminals, if there's going to be any turmoil, it makes sense for that to happen during the 2020 election. So it's going to be pretty chaotic. I'm ready for some pretty uphill battles as far as trading and everything like that goes. So I would say anything you want to have for defensive purposes, I would get it now. And I would also learn to trade in the meantime. I've been saying this to gold and silver investors for a long time. You don't just have to sit there and hold it. If you love precious metals, you can also learn to trade it. So you're making money when it goes up and when it goes down, and you still have that defensive play. And my channel does teach you how to do that. The bad news is you would have to actually learn how to trade Forex first. The good news is well, the channel does that for you as well, and that's a skill everybody should have anyway. So
Yes, and your YouTube channel is very robust. You have videos just that hit on every different aspect. So if you could just, spend this last minute here talking with us today, VP, what are some of the things that you like to, what are some of the strengths that come out of your videos, and what are some of the things that like a viewer could get by going to your channel and watching some of your videos there?
Well, my channel was just really the anti-channel. It was for people who were like me, who were frustrated with everybody in the Forex space, at least from a technical analysis perspective, talking about the same 10 or 12 ways to trade charts. It's like, isn't there anything else out there? That can't just be 10 or 12 things. Well, it turns out there was a lot of different ways to approach this. People just weren't aware of them. So I did all the dirty work, and over time, I researched everything and put everything together. And now I'm kind of bringing that information to you. I don't spoon feed people indicators and tools. I kind of have them go out and find those things themselves. But that turns out to be the best part of it, because they come back with trading systems that, at least on the surface, look better than mine do. And they can say they put that together. They didn't just get it from me. So it's for people who want to put in a little bit of work. But once you have a really great system in place, you have it for the rest of your life. And that's really, and I just want to get everybody in the best position possible to have something like that, because you can't rely on fundamentals from a short-term or a long-term perspective. So if you can become independent of those for the most part, and trading's a great way to do that, then that's a skill that you will have that almost nobody else does.
VP, I'd like to thank you for joining us today on Silver Doctors.
It's a pleasure, Paul. Thank you.